Early exchange, shaping policy, advancing development.
You know, it is often said for, Liverpool fans, never walk alone. Never walk alone, even though I'm not a fan. But that applies to what's about to happen now. As you know on this program, I can never be alone. Blessing is here as well. Blessing, glad you have joined us.
Good morning, Femi.
How are you today?
I'm great, thank God it's Friday.
It's Friday, yes. There's always this vibe about Friday,
It's a party vibe. It is rest vibe.
Yeah.
Whatever good vibe you could call it, so you can take care of yourself ahead of a new week.
Great. So the vibe is needed on a day like this. It's
Very
Friday.
much needed.
Great. All right. Glad to know you're still there with us. And that's blessing is, I just said, it's Friday where we give you the necessary vibe. Now, let's start our business of shaping policy and advancing development by looking at Africa's external debt ahead of the African Development Bank annual meeting, which is going to take place in a few days. It has been estimated that in the year 2023, Africa has to pay over $1 billion to service its debt. And in the year 2024, it's also been estimated that Africa as a continent is going to pay over $163 billion to service its debt in the year 2024. How did Africa get to this level? What are the concerns about Africa's external debt profile? And how did it get to this level? And what will be the implication for this conversation? We have the right mind for this conversation, and we're being joined by Ambassador Williams Wallace. He's a man of many parts, but presently he is the chairman, African International Chamber of Commerce and Industry. Ambassador Wallace, glad you have joined us this morning, and good to see you again.
Good to see you again, Femi and Blessing. And yes, TGIF, it's Friday. I'm happy that it's Friday over there in early Friday morning here in Trinidad, 3 a.m. But I can't miss you guys, Femi and Blessing and SOUQ News, when we have such important, extremely important concerns for the African continent. I have to rise and shine. So here I am.
That's quite patriotic of you, and we must appreciate you for your time. To take this time to speak with us, it shows the level of your passion. I know you're very passionate about the African project, which is why you're the right man for this conversation. So let's get started. Ahead of the African Development Annual Meeting taking place in a few days, there are concerns about Africa's external debt profile. For years, Africa has been battling with severe debt profile. As someone who has been watching the continent as events unfold, what do you think is likely responsible for this high debt profile, and what would you say about the implication of these for the continent?
Absolutely correct, Femi, that this is a major concern to Africa. The first thing that has affected us is the individual countries of the continent having to negotiate weekly, very weak as individual countries with major financial donors, I have to call them, because they keep saying that they're donating funds to the continent. Biggest, of course, the IMF, the World Bank. They seek out very weak countries and use those countries for their financial benefit and economic benefit to dictate to us what to do, give us projects that are not our priority, and the debts can and have increased. Now, the main culprit for this is the African Union. Why do I say the African Union? If you look at the European Union as a model, the African Union has a right to negotiate on behalf of the continent so that the liability and the risk of debt belongs to the African Union. If you look at a company is a corporate entity on its own, and you can dissolve that company at any point in time when you incur major liabilities, you go bankrupt, there's bankruptcy. It does not affect you, the individual. So let's look at that as a means of a model. So the African Union, who is responsible for all the countries of the continent, I have to say nations, because this arbitrary countries by the Berlin Conference in 1884 is messing the continent up. When the African Union does not take that responsibility to sign off on loans from these major, I have to call them pariah financial institutions and countries like China, etc., the effect is that individual countries are piling up debts. Why? Because all of these countries sit down individually and negotiate for projects. Most times, elephants, major elephants that has no bearing on the continent's priorities. And that is why the continent needs to develop its own development goals and make the AU responsible for these debts. So therefore, what happens and what has happened is that the continent individually has been piling debt upon debt upon debt, individual countries. 163 billion, that is utter madness. What is that for? Let's examine it. Stadiums, nonsensical projects. What about health? What about education? What about food security? What about all of the things that needs to be accelerated for the growth of the continent? They should make the AU responsible for every single one of those debts, not the individual countries. That is to blame.
All right, it's good to see you this morning, this Friday morning.
Yes, blessing. Good morning to you. I'm
Good
heading back to
morning you
Niger.
too, sir.
I'm going to be telling you all that I need a good morning coffee when I come to you guys. I have to find some now as well.
You'll get
Yeah,
definitely.
fantastic.
All right, so let's look at Africa's debt burden. Now, 25 countries are already in excess debt or will be so because of what it is currently. Africa's debt already is more than $1 billion. It's $1.152 billion. It was that at the end of 2023. And Africa has to pay $163 billion just to service debts in 2024. You've talked about some of the institutions, the lending institutions, being the ones that kind of like entice African countries with these loans that they cannot repay. But let's look at what some of these debts have been used for and why it's become impossible to repay them. Do you think that these monies have just been collected without proper plan as to the repayment of these loans? And that's why African countries are heavily burdened with debts.
Blessing, that's absolutely correct. Because most of these leaders who go, hand, in their outstretched bodies, begging for loans, these individual leaders are not leaders. They are beggars for monies that they use for themselves and the cahoots. It is obvious, it is plain to see, and if you look around, that's mostly what has been happening. They do not have any plans that they can implement. They do not look at banking and servicing of debts. What they look at, let me get the money, and then I can decide what to do. Now, these lenders, they know quite well, and they understand quite well the individuals who come to them for loans, and they pile it on because they know they will not use it for the purposes that they are borrowing, and they know they cannot service those debts. Where are they going to get the revenue and the income? Let's put jobs are they doing? What major exports do they have to be able to earn revenue? in foreign exchange to service those debts. Their country currencies are absolutely useless. And yet, they do not have a fair trade balance with the people who they're borrowing from, if it's a country, or with the institutions, knowing fully well that they cannot service those debts. So they pile the debts onto them, knowing that the individuals will use those monies most times, if you look at it, for themselves, their party, their people, or of their cartel, and it has not trickled down to any useful projects that can generate economic exports and economic revenue. Examine it right across the continent, you'll see that it is not possible. Can you then, for example, you applied, they say, to a railway. When will a railway make enough money to pay back that debt? And you are generating revenue, for example, in the local currency, because people cannot pay in foreign currency. They are going to pay in their own currency, which is on a trajectory going down always. If you look at any currency on the African continent, they are hyperinflation. They are losing value at the rate of about 20% per annum. They know it's a debt trap. They cannot pay those loans, and they cannot generate the revenue to pay. If you take just the project that they are borrowed for, let's just say they're genuine. They are going to do a major infrastructure of rail. Where are you going to get the money? Over the shortest period that they have allowed you a moratorium to start paying that debt. Do the calculation, do the analysis. It's not possible.
All right. Now, the African Development Bank, AFDB annual meeting is slated for Monday, which is going to take place in Kenya. Now, one of the thrust of the conversation will be the financial architecture in Africa, especially the issue of Africa's debt profile. What are your expectations, and what will you expect the participants, the African leaders and the global leaders that are going to be at these meetings to look into as regards addressing the financial architecture in Africa, and most importantly, the issue of Africa debt profile?
Right. The African Development Bank, as a tool and a financial institution, should look at the role that they have to play in brokering financial loans. They are a bank. If you go to a bank normally looks at what have you got? What skin in the game do you have? Can you pay back your borrowing if you're doing a mortgage or a business? Will your business be able to generate that finance to service your loan and then pay it off? The African Development Bank, like the AU, must look at the debt profile and broker on behalf of the paying back of loans. Do they take guarantees of the total loan profile of the continent and therefore act sign off on it and say we are responsible bank to bank to countries and the continent's debt profile. The bank has to act as a bank and as an institution that can demonstrate to the continent that they're there to defend their interests. So the role of the African Development Bank is to look at the debt profile. How can we stand in the middle and not suffer the countries having a debt profile that they cannot manage to repay? So if they are getting revenue from all of the debt countries, right, they will use that and broker with the financiers to look, we will stand, in the corner for these banks, we will guarantee the payment back. They will attract from all these countries, right, revenue that they must pay into the African Development Bank to repay their debts, and let those two institutions, the African Union and the African Development Bank, be the ones responsible for negotiating, paying, and sustaining the debt repayment profile. That must be and should be their role, rather than talking and, walking around the world doing the very same thing that the countries are doing.
Now, do you think the AFDB will want to put themselves in that position of standing as a guarantee or guarantor for the debts owed, knowing very well the practices of leaders of some of those countries, especially when regime changes, one regime ends and another comes in? Do you think they would trust that if they come into that agreement, the African leaders will hold on to their end of the bargain?
Well, it's a legal contract, just like the Chinese contract. If you don't pay, we take over your institutions, we take over the riches of your country. They are collaterals. So the African Development Bank can be guarantors on the basis of any other bank. So they say, okay, we take over your mining sector, use the mining sector judiciously if the country cannot pay back, and negotiate for mining exports. And because they are in charge of that, they will obviously ensure that they can run those operations to get the money back. What happens of an ordinary bank? They take over your business, right, if you can't repay, and sell off your assets, don't they? So the African Development Bank, like countries who lend or institutions who lend, can do the very same thing. Whether the regime changes or not, the country will now have a debt owed to the African Development Bank. And we are not having the money, right, go out of the circle of the continent. It is within the continent because the African Development Bank belongs to the continent. So we are still benefiting from the point of view that they will now, in the place of bad leadership, take over debts, take over assets, take over resources, and operate them and financially and judiciously utilize those to repay their guarantees for those debts. It's as simple as that. Play their role. They must play their role as a bank. They are a bank. Don't forget, the basics of banking is collateral, right? Guarantees, contracts to ensure that you can repay. They will be the ones doing the examination and saying, do you really need this loan from this institution? Are you able to pay? And they do the first due diligence. They say, no, this program, this project, do not touch it. Let's look at something else that we can use, that you are able to service, and pay us as your guarantors. If not, we will run it for you on behalf of you and get that payment back to the lender. So it's a first pass. The African Development Bank is your first guarantor, and they are the ones who are protecting you from the institutions taking over your resources and your assets when they know you cannot pay.
All right. You will agree with me that when it comes to the culture of borrowing is a universal practice, but there's something quite significant about the African continent where borrowing seems not to be achieving the purpose intended. What kind of mechanism can be put in place to ensure that these loans that are being borrowed are used for the purpose intended? And what are the peculiarities about the challenges associated with obtaining loan in Africa? And what would be the way forward, if you permit me to use that cliche?
Yeah, Femi, you have hit on the sweet spot of banking. Banking, if you are running a business, they will have bridging loans, they will have releases of funds over the period to monitor. In other words, they don't give you the bulk of the money. And those are basic banking rules. They will say, okay, we agree to lend you $1 million, but we will monitor how you apply and implement them to your business and release them as and when. If they find that in the first quarter, you ran straight to buy a Mercedes-Benz, you bought a house, and it's not been applied to the business, they yank the loan. They yank the loan and take over that business as part of their guarantee, as part of their contract signing, and ensure that the management stands aside. Someone from the bank will oversee the running of your operation and get their funds back. But they have only risk a portion of the total loan value that they have agreed with you. Do these countries do that? No. They give you the bulk of the money, knowing fully well, just like an individual, you are going to use it for your own gain, and therefore you are not applying and implementing the money to the projects as you have said you will do. If these people were serious, they will map out a plan. They will map out bridging finance. What is your skin in the game? How much money do you have for the project that you're about to do? So that you lessen the exposure that the country has for the money they want to borrow.
Well, finding how to connect with our guest. He's trying to talk about what should be done, the right template, Universally, when it comes to borrowing, it's a universal practice. Even big nations, they borrow. If you look at the top 10 economies or the top 10 big economies in the world, they are also victims when it comes to borrowing. But when it comes to Africa, it seems to be a different ball game, because you observe that over the years, Africa has been engaging in borrowing. Some of these nations, Nigeria, for instance, borrowing for several things or the other, but you understand that even the issues are still there. Now, it's trying to address the issue of policy, which is also part of the reasons. Then when you talk about also the political interference that takes place when it comes to administering this loan, it's also one of the issues. You've had instances where certain money are allocated for certain projects, but they are not being done. So it talks about the political will of the African leaders when it comes to utilizing loans the way they expected to be done. Loans are obtained for economic reasons, for projects or for investment. But you observe also that because of political interference, some of these monies are being diverted. And Ambassador is trying to provide the right template. For me, I think it's also important for us as a continent to also look inward. I'm looking forward to a situation whereby Africa's continent will trade within itself, and that can also help, to show up our external reserves. And also when it comes to Forex, you have a situation where Africa as a continent has a challenge of seeing itself as one entity because of the trade barriers and all that. All right. Atlanta, our guest, is back with us. Let's shift the conversation back to Ambassador Wallace. Glad to know you're still there with us, sir.
I'm happy to continue. So we talked about using the banking model, which can be applied across any banking and loan structure, whether it's the African Development Bank or whether it's any other bank or financial institution. But with Africa, as opposed to other parts of the world, their guarantees are normally for the resources of the country. And they ensure that they give you the total loan rather than having the loans separated over a period of time and monitor how those loans are applied for the projects they have borrowed for. And therefore, it is wrong, an individual or corporation or country, the total loan value without monitoring the money that you are lending them.
Now, I would like to have your take on this trend in Africa now, where for obtaining loans, loans are obtained in exchange for natural resources. You have issue of gold swap, even crude swap, which are being done in exchange for loans in Africa. What do you make of this trend, and what will be the impact or implication of this pattern of obtaining loan to the continent?
This pattern has to stop because this pattern is solely applied to the African continent because Africa is where everybody wants to be. So everybody comes into Africa to benefit for their own territories or their own institutions or their own countries. They see Africa as being weak because they are not united, and they see that the African Union, for example, is not doing their job. Neither is the African Development Bank, who, by the way, a lot of their funds are also coming from outside countries, not within the continent. The African Development Bank should be 100%, as you have indicated, shared among the, and input and financing should be from the continent, not from outside, so that we trade between ourselves, we develop our currency among ourselves, and we take care of our debt among ourselves. So the risk ratio remains within the continent rather than outside the continent, where it is used to underdevelop the continent. Because when we borrow from the outside and we are giving our assets to those lending institutions, we are not developing. There's underdevelopment there. If we are trading among ourselves and we have debt, we are still developing, but our debt is being restrained to the continent and to the continent's financial institutions. So in other words, we sort it out between ourselves. We do not go outside to stop the progress of our development. When we when we borrow and we can't pay back, we push back our underdevelopment, right? And our potential for development years back. When they change regimes, again, the next regime borrows for their own selfish purposes. We going further back, a major vehicle to ensure that we are debt-free from external sources.
Now, if the aim or the plan should be to be free from external borrowings, now how can Africa improve its internal domestic resources mobilization so that instead of turning to external borrowings, it can have that done domestically? And do you think that domestic institutions will be willing to dole out funds to governments of Africa without fear of having their monies back?
Well, I said earlier on, what do? They do the very same thing they will have to do as the external lenders do. Take guarantees against resources, but have a proviso, a caveat, that they will be responsible for running those operations or resources that they have borrowed, lent against, and therefore it is remaining within the continent that they can apply the experts and the particular skills to run those institutions, right, judiciously, so that they earn from it and they know that they have taken the guarantees on the basis that beforehand, when they're doing their calculation, when they're doing their due diligence, when they're doing their loan profile, they know that if these countries negate on their loans, they can move in and ensure that they can take over those industries or those assets or those resources and run them within their profile, their institution's profile, to ensure that they get their money back. And also, if they apply the principle of banking, they keep releasing funds as and when required. That is not done with external loans. You know, we just get they are given bulk. That is wrong banking. And they know that. The financial institutions know that. But if your agenda is to underdevelop Africa, give them all the debts, know they can't repay, and then we grab their resources. But if we do it internally, we will apply and should be applying the principles of banking. We release funds. If we see that you cannot continue with that project and you misuse those funds, our exposure is limited to what we just released for that quarter. You can break it down as small as that, or for that year. And therefore, we see that you've not been able to complete the projects, you have not been able to implement them, you have wasted those funds. We have only exposed 20% of our total exposure we promise you. We move in, recover that 20%, and continue from there on if we want to continue the loans. So you are minimizing the risk, you're minimizing the exposure of the risk, and you're minimizing the debt of that country profile. Because you can say, okay, no more lending to you, right? And they now have to just stand aside because they have not been able to employ judicious and proper implementation of the loan that they were promised. And that ensures for us as a continent and for us as our own institutions, it ensures a comfort of being able to breathe and operate, you know, without major debt on our hands and our resources and raw materials going out externally.
All right, according to statistics, Africa as a continent is expected to pay about or over $163 billion to service its debt in the year 2024. Help us understand what will be the implication of this for the continent and how do we stop this trend?
Right. The implications for the continent is very dire. It means many developments, many priorities that should be priorities will not be able to be achieved because the continent has to look at servicing and paying back those debts. In a year like 2024, 163 billion. Do you know the impact of that on the continent? Do you know the impact of that on the individual countries? They are going to be going backwards.
Early exchange, shaping policy, advancing development.